What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to do part 2 of my video that I just posted. I just was like, oops, I forgot to do the dividend history on one stock. Somebody called me. It was work related. And they asked me a question. I was like, must have been thrown off when I was doing that. So I was like, oops. So I want to post the dividend history on that. And then we're going to jump to why it is not a good idea to buy AGNC stock. People still ask me why. I'm going to continue to show you the trends and a better mreit that has blown it out of the water and has beaten the S&P. AGNC is garbage. I'm going to show you why. Let's jump to that. First thing I'd say is, whoops, forgot to post the dividend history of Huntington Bank shares. So look at 2013. It is 5 cents, 6 cents, 7 cents, 8 cents, 11 cents, 14 cents. Now it is 15 cents. A PE ratio 12.48, dividend yield of 4.2%, annualized dividend. It appears to be 15, 30, 45, 60, 60 cents for annual dividend. I like it. The trends are up. So I did buy the dip and then I sold it. And I'm probably going to rebuy it once I create my financial section in M1 Finance, my financial sector. But let's jump to our favorite stock that everybody just loves to talk about. Here's our mortgage back rate AGNC Investment Corp. It is sitting at $16.94. Has not done anything against the S&P in the past 5 years compared to the other mortgage back rate that I'll compare it to. So $16.94. Let's see how it's done since inception. $15 really hasn't jumped up. Oh, 29, 30, 19, 17. Nothing. Not really rebounded strong against the pandemic. Now you can buy the dip, buy the dip and maybe make a big profit because it'll eventually go up, but it is really not consistently jumped up. And its dividend history is atrocious, which I'm going to reveal to you. 16 cents, 12 cents, PE ratio 3.06, dividend yield at 8.53%, annualized dividend of $1.44. How would it feel to lose value? How does it feel when you buy a car and it comes out of that lot and it just depreciates? That's how it feels with AGNC. You buy a car out of the lot, let's just say $50,000. The moment you buy it, it just decreases its value, decreases its dividend. 8.53%, you should be thinking yield trap. That should be an automatic yield trap. You got to be careful when you look at things. You got to study the trends. I'm telling you, one thing I learned as a dividend investor, I started in 2018 with dividend investing, and you got to study the trends. How does it done in the past 5 years? How has it done in the past 10 years? Is it in demand? Is it doing well against the S&P? Is it completely destroying the S&P? Is it Roth IRA material? Is it traditional IRA material? So when I buy monthly dividend stocks, let's just say Abbvie Realty Corporation or Realty Income, those guys are in demand. Is AGNC really in demand? And does Realty Income decrease its dividend? Does Stag decrease its dividend? Does Abbvie Realty Corporation, a stock that the board of directors, a reit that the board of directors said we're going to be a monthly dividend stock? No, they don't decrease their dividend. Now, mreits have a horrible reputation of decreasing their dividends over time. Now, I do own a cover call ETN that's focused on mreits. Who knows what's going to happen? It'll be a scatter bomb. I'm okay with that, with it being, $5 or $6, and I could just get a high yield. It's a covered call ETN. It does the job for me, But an individual mreit is a huge risk. Why would you want to buy something that decreases over time? I mean, it's like you think, these people that it's funny, I go out in public and some of these girls tell me that they're Instagram models and they're rotten, or some of these guys, they'll say, out at the bars, well, I'm a Instagram model. They're dumb as a box of rocks. And It's just funny. And I just think of depreciation like, you know, you're not valued very high. Okay. You don't have high morals. And some of these people that I have, had conversations with that are models or this and that, men and women, they're so snobby and they have terrible attitudes. And, what happens when those looks deteriorate? What about the inside? That's just like AGNC. You could be very attractive on the outside, have this high dividend yield like a yield trap, but when you're not looking good in the inside, things aren't good. And the inside is a decreasing dividend and the decrease in price per share. These guys haven't done very well. So you guys need to wake up when you're looking into these mreits and these monthly dividend stocks. Watch out for yield traps. Okay? I'm just giving you a warning. You can do what you want. This is not financial advice. This is for entertainment purposes. I have a disclaimer in my comment section. But I want you guys to look at the trends before you make calls. You can't just jump the gun. Oh, there's a high yield. Be careful out there. Okay? Looks don't mean everything when you're with someone. You're dating someone and you're going for looks. This is what happens. Sometimes problems happen. Looks very attractive in the outside and the inside, you just get eaten alive. And then everybody says, I told you so. Let's jump to the stock that's an mreit that's way better than AGNC. And it runs circles around it. I just posted a video about it. Well, so this is kind of like a follow-up from the first video. So here's Arbor Realty Trust, a stock in the past 5 years that has beaten the S&P. A mreit. An mreit that has beaten the S&P. Obviously, they know what they're doing. I don't think AGNC knows what they're doing because they're not beating the S&P. They're not going up. Okay, they're just stagnant. Nothing impressive about AGNC. And then let me just show you its dividend history of Arbor Realty Trust. And you're going to be like, why did I buy AGNC stock? Let's jump to that. Still going up. 28, 29, 30, 31, 32, 34. PE ratio 7.19%. Dividend yield is 7.63%. Annual dividend of $1.36. So you tell me, how do you feel getting suckered by AGNC stock? The yield is high. So Arbor Realty Trust, the yield's high too. But who's been increasing their price per share? Who's been increasing their dividend yield percentage? A little bit higher. Okay. Who's just about right at the same range of dividend yield? Who's not a dividend yield trap right now? You guys got to do your homework. I'm telling you, that I do videos with stock and dividend analysis videos. I tell you why. I got suckered into AGNC too, but it looked so attractive on the outside, and I'm like, okay, maybe I'll take a little bit of a risk. Then I got rid of it. Okay? It doesn't hurt to get rid of it and buy a better stock like this. I mean, you can sell your AGNC and throw it into Arbor Realty Trust. Again, this is not financial advice, but I'm going to tell you I did sell some of my AGNC and threw it into Arbor Realty Trust. And I'm going to tell you those dividends are increasing. My E-Trade dividend portfolio is rolling because of this. I'm going to buy more Arbor Realty Trust, and I'm happy with what I see. I want my dividends to increase. I don't like decreasing dividends. I sell those stocks. Those dividends decrease over time. Now, pandemic recession, you just got to hold on to it and suck it up. I mean, that's what happened to my stock, Wendy's. That's what happened to a few other stocks, but they're slowly starting to rebound. These guys are still on the upswing. AGNC is on the downswing. Somebody's appreciating, somebody's depreciating. So they have a better business model, obviously. So why do you even care about AGNC when you have a stock like this? So that's round 2 of my video. Let me know what you think of this video. Again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good